was a losing trader for 2 years until I realised that price is so much more than just a candlestick chart. I'd watched every single video there was to watch on ICT, SMC, all the strategy you see online. I watched them all. I had good discipline, I had good psychology, good risk management. I was placing sensible trades, yet I still couldn't become profitable. It was only when I realised that there are other things you need to incorporate to your candlestick chart, which is when I became profitable. Since then, I've been able to travel the world, move out of my house, buy all these cool clothes, these cool cars that you see. But before that, I was struggling and I was stuck and I didn't know why. I thought I was doing everything right. I was doing everything people tell you to do. But the problem was I was just looking at the candles. I wasn't looking at what was behind those candles. And that is when everything changed for me. And the fact is, if you're still just looking at candlestick charts in 2026, you're not going to make it. You can be working for 2 years like I was, doing all the right things and still not be profitable. You need to incorporate the things I'm going to talk about in this video to finally become profitable. I've been profitable for 3 years now, and it's ever since I implemented those other things behind the candlestick chart. So I've just closed out these 2 trades from this morning due to us having news in about 20 minutes time at 1:15. I just want to do a quick breakdown of how we caught these EU shorts this morning and how you could have done the same. So starting off really simply, the trend and momentum. Now the first thing you need to know is the trend is your friend. If you look at the market, we've been moving down for how long? Since the 23rd of December, right? Price action has been consistently bearish since then, right? So we are instantly more able to catch shorts than we are longs. What are the chances that we short and it continues to go short? Probably quite high, because trends that have happened typically continue, right? Compared to what's the chance that we've been short this whole time and then suddenly price goes like this and we manage to catch the buy up. There's way less chance for us to catch the buy than there is for us to catch the sell. For example here, this buy here was way harder to catch than this sell down here. Same way we caught sells here, and then obviously we caught sells here. So that's the first thing. That's number one, is to keep it very simple. Right, and now the other thing, just going a little bit deeper into this trend scenario that we're talking about. So we've established we're bearish, right? We're in a bearish trend and the momentum is with the bears, right? So now we want to mark out the highs and the lows. So we've got a high here, low here, and then we broke that, right? So our current high is here, our current low is here. And is it a bullish range or is it a bearish range? Which one is it? Well, it is a bearish range because we recently broke lows, right? Therefore, the range is bearish. And what typically happens in a bearish range is we will mitigate internal liquidity and then move down to external liquidity. All right. So that's typically what happens in a bearish range. So luckily for us, what we can see is we had this order block here, which was our internal liquidity. So internal liquidity is just order blocks and fair value gaps within the range. External liquidity is just the high and the low of the range. As I said, we're interested in the external low because we're in a bearish trend and a bearish range. So we're typically going to mitigate an order block or a fair value gap and then continue down to the range low. And this is in essence how trends form. Mitigate and then drop, mitigate and then drop. Luckily for us, we didn't even have to predict that. The trade the day prior, you would have had to predict that. But this morning, when we woke up and looked at the charts, we saw that price had fallen 45 pips, right? Even lower than that, about 50 pips to the downside. So for me, that confirmed to us that we are rejecting this order block and our next stop is going to be this external low, rather than us breaking through this order block and coming up to here. Because what are the chances really, especially in a bearish trend, of us continuing down to this low? Pretty high. What are the chances of after a 40 pip rejection, price then changes its tune and has a fat move against trend? Probably not going to happen, all right? It's probably not going to be what happens. So again, that's the first few things, is the trend and the range. Keep it simple. We're in a range. What typically happens in a bearish range? Internal to external. And the next thing is the volume. So if I just quickly pull up a fresh Euro USD chart, and we can see now there are 2 main points of volume. So if I get rid of this, there are 2 main points of volume. So I want you to notice this here, this volume curve here. And I want you to notice the high volume nodes and the low volume nodes. So briefly, high volume nodes like this, price is going to be attracted into. Price is going to be willing to do business in these areas, and they'll be happy to chop around in these areas. So you can see evidence of that here where we have high volume. Price is willing to chop around. And even when we revisit this area, you can see price is chopping up and down. As much as we move through it, price is chopping up and down in this area, right? It's happy to trade and it's happy to transact there. So we've got a high volume node here. And we've also got, if you see, a high volume node here as well. If we just go onto this, you can see it a bit clearer. High volume area there and a high volume area here. So if we go back onto our chart, and you can see that obviously from the consolidation that price is willing to remain in that area. And price is essentially just going to be seeking out these areas because that is where it feels comfortable to trade. And it's going to move fast and erratic outside of these areas. So for example here, we have a low volume area where you can see there's unwillingness for people to participate in this area. So you can see there's no volume, which shows us people are not willing to do business in this area. So it's very unlikely that we consolidate in this area and have like movement like this, movement like this, movement like this. It's more than likely we move like this, straight through it or straight through it, okay? We're going to move fast in that area. And if we actually look at that area, we can see evidence of that. When we first came into it, you can see move straight through it, right? There was a few candles, but generally we didn't get price action like this. Price was unwilling to transact to this area, so we moved straight through it. And then look, when we try to revisit this area, price tries to revisit it, and we're instantly getting rejection, right? That is because we are unwilling to transact at this area. Institutions are unwilling to do business here, so they're not going to seek price to trade into that. Price trades into it, and what are they seeking out? They want price to return to this high volume area. So we trade in, back to the high volume area, trade in, back to the high volume area. Okay, and then if we drag that across even more, we can see again how we reacted yesterday, or not yesterday, it was more the start of the week, Monday. You can see in this low volume area, if we just go back a little bit like this, price is not consolidating in this area. We can see price is not moving like this, and it's not moving like this, and it's not moving like this. Price is chopping through this area. You can see, how can we see evidence of that? Well, we can see evidence of fair value gaps because there's no fair value here. So we're seeing blatant fair value gap, right? Fair value gap forming there. You can even see there was a lower one formed just there. And price to the downside chops through. And after we reject off of this old value area, you can see that again, price makes another fair value gap and moves straight through. So what I'm trying to tell you is we chop through these areas, right? And it's unlikely we're going to remain in this area for a long time. So how did I use that to actually catch these trades? Well, if we get out of replay mode, what do we notice? As we said, we had that 50 pip retracement, or rejection, sorry, when we moved down like that. And we can see that if we drag across this high volume area, and we drag across this high volume area, remember that was the area where we had high volume here, low volume there, and then high volume there again. So this is why we're looking at this area, the same thing we just showed you on the other chart. We can see we rejected this high volume area, right? And remember, price is going to seek out these high volume areas. We're not going to want to remain in these low volume areas. We're going to seek out the high volume areas. So yesterday, we can see price, or not yesterday, Monday, price rejected it, and then we bounced off here. And then again, we rejected this value area. As I said, we moved about 50 pips to the downside. Now, the fact that price rejected this old value area tells me, so cool. Previously, we was happy to transact in this area. We was happy to do business in this area, and that was proven by the high volume that we had. Now, seen as that we've got a big rejection, that tells me that price is no longer willing to transact in this area. So we're going to have to seek out other fair value. We're going to have to move either lower or higher to seek out other fair value. We dropped 50 pips, which tells me we're going to seek fair value lower. And if you see where it was lower, remember from that other chart, it was down here in this area here. So this is the area that I believe price is going to be seeking out. Okay, and I'm not expecting it to chop around here. So whereas a lot of people was going for manipulation moves, so for example, a lot of people were looking for the Asia low to be swept and then look for buyers up to the Asia high. I'm not really looking at that. The reason I'm not looking at that, as we said, is because price moves fast and trends through these areas. It doesn't consolidate in these areas. So I'm not expecting price to accumulate and move sideways like we did here in an area where there's no volume. Where there's an area with volume, yeah, I'd see that happening. But when there's no volume, we look to the left, remember there was no volume in this area. I can see the evidence, remember, by the fair value gaps, the fair value gaps, the fair value gaps. Price is unwilling to transact here. So I think that we're not going to get a reversal trade, and in fact we're going to just continue to trend to the downside, move to the downside and trade into this value area. So that was essentially my bias there. And then this trade was pretty simple. I mean, it's just using basic price action, nothing too crazy. Our Asia range sort of starts, and in midway through, you see we get a pretty heavy sell-off. So we're just looking to mitigate that and then continue the move down, as we did, as you can see in this day, where we created a fair value gap on the 30-minute. During the Asia session, with a sell-off, we're looking to mitigate that and move down. So you can see we created that 30-minute fair value gap, and it was as simple as that for the entry. Right, I think it was actually the 15 that I used. Yeah, it's the 15 that we used there. Right, and that was the entry, simple as that. Okay, so that was the initial entry, and then if you can see for the re-entry, if we go on the 30-minute time frame, let me get rid of these drawings real quick. You can see, so we had the initial sell-off, mitigation, sell-off again, and then what do we have here? Again, we clearly have a fair value gap. So first of all, that's showing me that what we want to happen is happening. Price isn't moving slow and consolidating around that area. I mean, if you compare it to price action here, you can see there's not many fair value gaps in this area here or in this area here. Price is moving slow because it's at fair value. It's not a fair value here. We want it to trend and move fast down to our new fair value. And obviously we created a fair value gap, and therefore we use this 30-minute fair value gap as the entry. And we used so we just entered at the top there. And we used the current value area high, the current point of control as to have our stop loss just above. So at the time of entry, you can see the point of control on the volume indicator was here. So we wanted to make sure that our stop loss was just clear of that. And to be fair, it was a pretty tight stop. So it was a 5 pip stop loss. And you can see we have high volume here. We have really low volume there. So that was another confluence for me, is that we had this low volume area here. This is only a minor confluence, but we had this low volume area here. So again, I know it's pretty likely the price isn't going to want to move up to here and then consolidate and find new value here. It's most likely either going to come up to this area and go absolutely crazy through it, or it's going to move quite fast down from it. And obviously we're bearish, so we wanted it to move down from it. And obviously that is exactly what happened. As we move down, and even you can notice when we're wicking into it, right, this low volume area, we're wicking in, but we're not staying in the area. We're touching it. You can see these wicks are touching it, but there's no closes. There's not very many closes within this area. They're rejecting it, right? But hopefully that makes sense for that low volume area there. And as I said, my stop loss was just above the point of control, 5 pips, nothing too crazy. And yeah, we're aiming for this next value area low right here. This TP should be a little bit deeper like that, and if both of these hit, it's going to give us 7.5 and 5 RR, so we'll round that down to 12 RR. So if both of these hit, it'll be 12% gain, which will be very nice. We do have stop loss of break even on this one anyway, but as I've said, I've now closed all of them out anyway because we do have news in 5 minutes time. So we've got about 1% profit on this one, and then about 3% profit on this one, so that's 4% for the day, using those concepts. So yeah, pretty easy, pretty nice, and hopefully you found this video useful, boys. Appreciate you watching. As I said, I do trade this live. Most of you probably know, but I do trade these exact type of setups live every single day, and these were caught on the live stream, and these were also sent into the Signal group. So I appreciate you lot watching, and I'll catch you in the next one, boys.